Hello everyone, welcome back to All Financial Discussion channel. For this video, I like to discuss on US CPI report. So in fact, Jan 2026 CPI report is just recently out. I will use the word shocking to describe this CPI report. In fact, this report, Jan 2026 CPI report, is actually favorable for us as an investor. So I will later on illustrate why. This video, I will explain with the new CPI report, what will be the inflation data, Fed rate cut outlook, and also the stock, bond, gold, crypto market impact. So basically, all this will be the objective of this video. Before I continue, guys, I'd like to urge you guys to help me by like this video. Guys, just give me a few seconds. Help me. Press the like button now. For those who are new to this channel, and if you want to support me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. This table here show a summarize on US Consumer Price Index. Okay, so basically coming to the first CPI year over year. Okay, so basically for January 2026, it is 2.4%. In fact, it is better than expectation. It also saw a decrease from 2.7 at December 2025. Coming to the CPI month over month, okay, so in fact, it is also 0.1% better than the expectation. So basically with this, you can see that inflation is basically under control. Coming to the core CPI, year over year, okay, core CPI means that we actually exclude the energy, exclude the food. Again, from here, you can see that they actually match the expectation and is also a decrease from 2.6% from December 2025. Coming to the core CPI, month over month, you can see that they actually match the expectation. And basically with all this data, we can conclude that inflation is basically under control. So this is actually the CNBC headline. Consumer prices actually rose 2.4% annually in January, less than expected. So basically this is actually very bullish as an investor. The US Consumer Price Index CPI for January 2026 in fact showed that inflation cooled further as compared to December 2025. This actually reinforcing the idea that inflation cycle is probably largely under control. Coming to the bottom line, Fed actually set this CPI as a 2% target. So basically now with 2.4%, we are actually very close to this 2% target that is actually set by Federation Reserve. This in fact confirm a strong disinflation trend. Okay, so basically later on, I will discuss these four main topics. Inflation is not longer the main problem. The first one. The second one is interest rate cuts are now much more likely. Third one will be the consumer are finally getting breathing room. Last but not least, markets are turning optimistic. So basically, these are the topics of discussion after we receive this US Consumer Price Index CPI report. With CPI report, we know that inflation is not longer the main problem. Inflation peaking in previous years has largely been defeated. Let's take a look on this graph. You can see that a few years ago, okay, in fact, US inflation is actually at the peak. Now, okay, as time go by, we are in fact nearer to 2%. That is actually a target that is actually set by the Fed. Why this issue has been resolved? This is because the energy price actually fell. If you take a look on this report here, you can see that gasoline actually reduced quite drastically. Okay, so this is actually one of the reasons why CPI has an attractive outcome. Next, you can see that the goods price in fact also stabilized. As you can see from here, okay, you can see that majority of the so-called item has been more or less stabilized close to 2. The used car and gasoline price actually decline. As you can see from here, they actually decline. Shelter housing inflation is also slowing. Okay, so this means that the price pressure across the economics are easing. This actually give consumer relief. Coming to the economic signal, the economy is actually heading towards a soft landing rather than a recession. Just a couple of months ago, we thought that US will be basically under recession. Now, with the CPI report, we feel that a soft landing is probably the best outcome. Coming to my second pointer, interest rate cuts are now much more likely because inflation is in fact under control. It is actually very close to 2%. That is actually a target for Fed. The market are increasingly expecting Fed rate cut to start somewhere in the middle of 2026. For March, okay, basically I feel that Fed probably will remain the interest rate. As you can see from this Fed watch over here, you can see that most likely close to 90%, the interest rate will remain unchanged. However, okay, I strongly believe that with the CPI report, Fed will start to cut interest rate sometime during the middle of 2026. So in fact, this is actually very bullish as an investor. Why? Okay, because why Fed want to cut the interest rate? Because now Fed no longer need this ultra high rate in order to fight inflation. Because now inflation is under control, so therefore there is no reason for Fed to remain high interest rate. High interest rate now mainly slow economic growth rather than control the price. The market reaction, okay, basically I will describe this market reaction later on. Okay, so basically I will describe, okay, basically the stock, the bond, the crypto, the gold, etc. Coming to the economic implication, okay, the borrowing cost for mortgage, business loan, and consumer credit may start to fall later this year. So this is in fact very attractive because with low interest rate, it will be very attractive for us to borrow more in order for us to invest more. So basically, with more money, with more liquidity into the market, the share price, the crypto, the bond, the stock most likely will rise. My third point of discussion, consumer are finally getting breathing room. Okay, so basically with inflation under control, the food price actually growth is actually moderating. Okay, so I myself as a consumer, I'm actually getting very tired to see the price of the food. Basically, they rise in a very alarm manner. Finally, okay, this is actually a positive news based on Jan 2026 CPI report. Next, the energy costs are also lower. The rent inflation is also slowing. Okay, so with all this inflation under control, we actually has a real purchasing power. Okay, which means that the money don't actually devalue. We can buy more items. Basically, this also will improve our household budget. Again, you will earn the consumer confidence. However, okay, the housing and medical costs are still rising, but just more slowly. Coming to the net effect, the cost of living pressure is easing, okay, but they are not gone. Okay, so they actually just reduce the inflation rate, but the inflation rate still exists, but in a gradually manner. Coming to my last pointer, markets are turning optimistic, okay, because with controlled inflation, and most likely we are going to have a rate cut in the middle of 2026. This is actually very bullish, okay, for all this market, okay, which I'm going to describe later on. With the CPI print, this actually supports risk-taking behavior and suggests financial condition may loosen in coming months. Okay, so basically this is all I have with the consumer price index. What will happen to the situation? January 2026 CPI actually in fact confirmed that inflation is now under control. This actually changed the entire financial environment. This is a very major micro regime shift. Okay, so basically, just a couple of few months ago, we are under this high inflation era. Now, with the US Consumer Price Index, okay, from the Jan 2026, we actually arrived into a complete new world, which is the post-inflation era. Earlier on, okay, most of us anticipate that we are going to have higher interest rate for a longer time. We are going to have a tight money. We also fear of a recession. And basically, when we actually invest, we will go into the defensive investment. However, with the CPI report, okay, basically, we can feel that the Fed most likely will cut the interest rate. We also going to have a loser money, soft landing optimistic, and we are going to invest on the risk on investment. So basically, these are the shift after the report of CPI on January 2026. Guys, before I continue, okay, basically the impact of CPI report on stock, bonds, crypto, and also gold, I like to urge you guys to help me by like this video. If you have learned something from this video, urge you to support me by subscribing to this channel and turn on your notification bell. With this, let's continue the discussion. With the CPI report, what will be the stock market impact? In fact, I like to explain why stocks actually like lower CPI. With lower CPI, this in fact means that inflation is actually under control. With controlled inflation, most likely Fed will lower the interest rate because they want to support a better economy. With lower interest rate, this means that it will be cheaper for us to borrow. And once it will be cheaper for us to borrow, we will borrow more in order to expand our company, borrow more to invest. This result in a higher profit. With more money into the stock market, this most likely will increase the stock price. So basically, this is actually the chain effect from a lower CPI. Finally, it actually arrived at a higher stock price. What typically will benefit most? The tech and growth stock, in fact, will be the biggest winner with the CPI report on Jan 2026. Risk and property stocks may also benefit. This is because with lower interest rate, which means that we don't need to pay so much in terms of the mortgage rate. So therefore, it is also very attractive for risk and also property stocks. Next, for small cap, okay, for small cap, they will be able to benefit because it will be easier for them to borrow. Next, for emerging markets and also Asian stock will benefit the most. Next, I'm going to explain the bond market impact. The bond price, in fact, move in the opposite direction of interest rate. So when CPI is actually falling, most likely Fed will cut the interest rate. And then with this, the bond price will go up because they move in the opposite direction. Interest rate reduce means that the bond price will go up. What happens next? Both the government bond yields and also the corporate bond yields will reduce because of lower interest rate. Therefore, the existing bond price will in fact rise, okay, because of lower interest rate. Who actually benefit the most? The long duration bonds, okay, as I explained earlier on, because of lower interest rate, the current government bond and also corporate bond yields, they will reduce. So therefore, those under the long-term bonds will benefit. Next, the investment grade corporate bonds and also the risk debt refinance will benefit because it will be cheaper for us to borrow. Coming to the conclusion, okay, with a lower CPI, this in fact will be very bullish for bonds. This is also why many large funds are now rotating into bonds. With Jan CPI report, I'm going to explain the impact on property market and also the mortgage rates. How CPI actually will affect the mortgage rate. Basically, when CPI actually reduce, most likely Fed will cut the interest rate. the global interest rate will also reduce. So therefore, the mortgage interest rate will also reduce. What does this actually mean? Okay, this means that our commitment to the monthly mortgage payment will also reduce. This, in fact, will make this more affordable, and therefore the property demand actually will be increased. There will be a price stabilization, or there will be a slight price increase for property. Since I actually stay in Singapore, let me quickly discuss about the property implication on Singapore. Basically, for private condo, it will be positive. For the mass market homes, for example, HDB, they will be very stable and will be slightly more positive. Coming to the rental, they will be stable because of the supply normalizing. Coming to the conclusion, okay, basically with the CPI report, it will be very supportive for property market. But however, I like to emphasize this, okay, we are not going to anticipate explosive growth, but firm floor plus a little bit of upsides. Next, I like to explain the impact on banks' fixed deposits and also saving rates. With a lower CPI, this means that Fed most likely will cut the interest rate. With falling interest rate, this simply translates into lower deposit rate and also saving interest, because it is less attractive to invest into bank fixed D and also saving rate. Therefore, money will in fact flow out of banks into the other asset. Coming to the conclusion, this probably will be a good time to lock into a longer term fixed D rate now. Cash become less attractive because of inflation. Next, I like to explain the impact on crypto. I'm going to explain why crypto actually loves falling CPI. With falling CPI, most likely Fed will cut the interest rate. This, in fact, will cause a money supply to expand. Because of the money expand, the liquidity actually increase. Investor will turn into a more riskier asset such as crypto. Because of weakening US dollar, crypto actually strengthen. Coming to the historical, okay, with rate cut and control inflation, this in fact is a bull market for crypto. Coming to this 2026 CPI report, okay, because from this report, we know that this inflation is actually under control. We are going to anticipate rate cut ahead, and therefore with liquidity cycle turning, this is actually very positive for crypto. Coming to the conclusion, okay, because of the new CPI report on January 2026, this in fact is actually very bullish, a macro signal for crypto. This does not simply mean that a straight up, okay, but the micro win is now behind crypto. Coming to my last slide, okay, the US CPI report on the gold impact. The gold will actually rise when the real interest rate fall. Because also the gold will also rise because of the weakening US dollar. Once the monetary easing begin, the gold will start to rise. Coming to the CPI implication, okay, once the inflation is actually under the control, Fed will cut the interest rate. The real yield, which is the interest rate, will reduce. So therefore, the price of the gold will be increased. Like I mentioned earlier on, with lower CPI, this in fact is actually bullish for gold. Gold become attractive again as rate pressure actually disappear. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for your strong support. I hope to see you guys soon. Bye for now. Thank you so much.